Investors in the Asia-Pacific region began the final week of September with a sense of caution and restraint, reflecting a market environment where uncertainty is the prevailing mood. As trading opened, markets across the region moved in mixed directions, with some indices inching higher while others slipped, highlighting the lack of a clear consensus among investors. Instead of making bold bets, many traders are choosing to wait on the sidelines, seeking more clarity before committing to new positions. Australia, in particular, has captured the market's attention this week. Key economic data releases and a pivotal Reserve Bank of Australia meeting are on the horizon, with decisions expected to send ripples not just through Australia, but across the entire Asia-Pacific region. This sense of indecision is not limited to local factors. Broader global uncertainty, from ongoing geopolitical tensions to the unpredictable actions of central banks worldwide, continues to weigh heavily on investor sentiment. After a period of recent rallies that brought optimism to the markets, investors are now pausing to reassess, carefully weighing the potential for further gains against the risks that are beginning to emerge. The Reserve Bank's interpretation of the latest economic data is widely seen as the main event of the week, prompting many market participants to hold back and observe rather than act. This holding pattern is a familiar response in times of uncertainty, as investors prefer to wait for a clear signal before making significant moves. The market now stands at a crossroads, balancing the hope generated by past gains with a growing sense of anxiety about what the future may hold. All eyes are firmly fixed on Australia's upcoming data releases and policy decisions, which are shaping up to be the first major test of market resolve as the week unfolds. As the week begins, investors are gathering information, analysing every development, and waiting patiently for the right moment to make their next move in these uncertain times. The Reserve Bank of Australia faces a tough choice at its upcoming policy meeting. The decisions made here will have far-reaching consequences for the Australian economy. It's challenge control inflation without stalling economic growth, a delicate balancing act. This is a scenario that requires careful consideration and precise action. Most analysts expect the central bank to keep rates steady at 3.6%, a move that reflects a cautious approach in uncertain times, signalling caution after earlier cuts. The bank's previous rate cuts were aimed at stimulating the economy, but now the focus is on maintaining stability. Conflicting data complicates the decision. Economic indicators are sending mixed signals. Some indicators show persistent inflation, which could erode purchasing power and savings. Others hint at a cooling economy, suggesting that growth is slowing down and businesses are feeling the pinch. Holding rates would buy time to assess the impact of previous moves. This period of watchful waiting could provide valuable insights. The board's debate will be robust, with members bringing diverse perspectives to the table, as they weigh risks on both sides. The stakes are high, and every option has its own set of consequences. Their decision will send a clear message. The direction they choose will be closely watched by markets and policymakers alike. Steady rates mean watchful waiting, a signal that the bank is taking a measured approach. While any surprise could shift market expectations, a sudden change could lead to volatility and uncertainty. Investors are laser-focused on the bank's announcement and accompanying statement. They are looking for clues about future policy directions. The outcome will shape sentiment for months ahead. Market confidence hinges on the bank's ability to navigate these turbulent times. The Reserve Bank's next move is pivotal for Australia and the region. Its decisions will influence economic stability and growth prospects. The Reserve Bank's dilemma is fueled by conflicting economic signals. August inflation came in hotter than expected, pressuring the bank to consider higher rates. Yet the labour market is softening, job growth is slowing, and wage gains are moderating. Strong second-quarter GDP, driven by domestic demand and government spending, suggests resilience and less need for rate cuts. The bank is caught inflation and growth argue for tightening, but weaker jobs data urge caution. Investors are watching to see which side the Reserve Bank will prioritise. The upcoming decision will reveal which piece of the puzzle matters most. Australia's economic cross-currents make this a critical moment for policy. As Australia awaited its central bank's move, Asia-Pacific markets showed no clear trend. The MSCI Asia-Pacific Index rose 0.5%, on track for its best month in a year. Australia's S&P ASX 200 gained 0.43%, reflecting cautious optimism ahead of the RBA meeting. South Korea's Kospi and Kosdaq rallied, while Hong Kong futures pointed higher. Mainland China lagged, with indexes falling as investors took profits after August's gains. Even strong services data couldn't offset the selling in China. Local sentiment and technical factors are driving short-term moves across the region. Japan's stock market pulled back after hitting record highs the previous Friday. The Nikkei 225 fell 0.68% and the Topix dropped 1.27% as investors locked in profits. The rally had been fueled by strong earnings and Bank of Japan support, but markets rarely rise in a straight line. Monday's pause signals a reassessment of valuations and a wait for the next catalyst. The yen's stability wasn't enough to offset profit-taking. Investors are now focused on global trends and upcoming data. The pullback is a healthy reset after weeks of gains. For now, the priority is protecting recent profits. Asia's mood often mirrors Wall Street, which ended last week with a rally that brought a sense of cautious optimism to global markets. The interconnectedness of financial centres means that what happens in New York can quickly ripple across the world, influencing investor sentiment from Tokyo to London. The Dow rose nearly 300 points, snapping a 3-day losing streak, as inflation data met expectations and reassured investors that price pressures might be stabilising. This uptick was a welcome change after a week of volatility, with traders closely watching every economic indicator for signs of what might come next. Relief over no negative surprises from the Fed encouraged buying, but the week still ended with losses for all major US indexes. The central bank's steady hand calmed some nerves, yet uncertainty about future rate hikes and economic growth lingered in the background. The Nasdaq, S&P 500 and Dow all slipped for the week, reflecting lingering concerns about the economy and rates. Investors remain wary, as persistent inflation and mixed economic signals continue to weigh on market confidence. Friday's bounce was a temporary reprieve, not a sign that worries have vanished. Many traders see these rallies as opportunities to reassess their positions, rather than a clear signal of recovery. US futures pointed slightly higher in Asia, helped by positive company news like Alphabet's antitrust win. Such corporate victories can provide short-term boosts, but broader market direction still depends on economic fundamentals. Still, the focus remains on jobs and inflation data to predict the Fed's next move. Every employment report and inflation update is scrutinized for clues about how aggressively the central bank might act in the coming months. The US economy and central bank policy continue to drive global sentiment, shaping decisions in boardrooms and trading floors around the world. The stakes are high, as even small policy shifts can have far-reaching consequences. Investors are watching for any signals that could shift the outlook, whether it's a surprise in economic data or a change in tone from policymakers. The search for certainty in uncertain times keeps markets on edge. Wall Street's performance sets the tone for markets worldwide, acting as a barometer for risk appetite and economic health across continents. As the new week begins, all eyes remain on the US for the next move. Looming over markets is the risk of a US government shutdown as budget talks stall in Washington. Political gridlock adds uncertainty, which markets dislike. A shutdown would halt non-essential services and delay crucial economic data, like the monthly jobs report. This data blackout would leave the Federal Reserve flying blind, increasing the risk of policy mistakes. Investors are wary, as missing data complicates economic assessments and Fed decisions. The threat of a shutdown is another reason for caution and risk aversion. Until resolved, this political standoff will weigh on markets. The uncertainty adds to an already complex global picture. Investors remain on edge, awaiting clarity from Washington. Commodities are sending their own signals about the global economy. Oil prices are falling as OPEC Plus is expected to boost production, pushing US crude to $63 and Brent to $67.50 per barrel. Lower oil prices can ease inflation, but may also signal weaker global growth. In contrast, gold has soared to a record $3,143.49 per ounce, as investors seek safety amid uncertainty. The surge in gold reflects deep market anxiety and a flight to safe haven assets. The divergence between oil and gold highlights growing caution. Commodities are echoing the defensive mood gripping global markets. Investors are hedging against volatility and risk. The week opens with global markets navigating a sea of uncertainty. Asia-Pacific's mixed performance reflects competing forces, optimism, and risk. Australia's Reserve Bank decision is the main event, with its balancing act mirroring global policy challenges. US political risks and commodity swings add to the complexity. Many investors are staying on the sidelines, awaiting clearer signals. The flow of new data will determine the next market trend. Until then, markets remain sensitive and reactive. The answers that emerge in coming days will shape the next global move.